Well, sure glad that you've joined us here on this Monday. John Jenkinson with you. Let's go straight to the markets here and get you up to date on the latest on the futures provided by Bar Chart, and then we'll turn to Chris Swift for a little bit of analysis as to what to expect. So right now, the corn market, it got off with a weaker start. It continues to leak lower now with December down 6 1/4 at 372 1/4. We're on the low of the day, and we're on the low of the day for March, May. July is not quite, but it's only 1/4 of a cent away. So that gives you a little bit of an indication of what we're seeing. We're almost on the low of the day in the November soybeans. We're at 10.31. That's down 12.5 cents. January down 12 at 10.35 1/4. That is the low of the day, and so is the March. We're starting to see a little bit of a pattern over here develop in the row crops. And it's kind of bleeding off into the wheat. December Chicago wheat down 8 1/4, 566 3/4. 565 is the low of the day, so we're still a penny and 3/4 away from that. July is down 7 1/4, but 575 1/2. Kansas City wheat, it's lower too. December down 5 3/4 at 498 1/2, and that far out July new crop is down 4 3/4. It's at 522. Minneapolis wheat for December down 6, and July down 7 1/4 at 570 1/2. Chris Swift is here with us. Chris, what do you think here? These markets, is this a quote unquote? Sometimes the market calls this a healthy correction, or do you think that this could be the starting of something bigger?
Well, it's kind of interesting, John. I know that we're looking in front of us a great big harvest. Every single bit of harvest news that I've heard so far has showed increasing yields. So we know that we've got additional acres out there, and we know that the yields so far have been really excellent. And from what Tim said, it looks like we're going to have some really good dry weather to contend with for harvest as we push north.
So do I read in between the lines here that you say harvest pressure could stay around here for a while?
I think it's on its way. China has been a big buyer all the way up, and a lot of the grains that they're buying there will finally be able to have some new crop delivery against them, as a lot of those were 20 and 21 deliveries. So it's not that we're worried about us not having the crop out there, but seemingly they did a lot of buying before this crop was harvested. That kind of put a little bit more importance on this crop, and now that it's so close to harvest time, we see some of those risks fade just a little bit of not being able to get the crop out of the ground.
Well, it's kind of bled over into the wheat market today also, and I thought that last week we were a little concerned about some of our competitors and how dry they were.
Well, and I think that the wheat market is probably just reacting with the bigger move of the corn and beans this morning, but wheat's got some serious issue. There's some dry areas, and I think some of these seedings have been held off until we get a little moisture brought into some of those areas.
Cotton market this morning is down just 4 points at 65.62 after getting off to a little bit of a higher start here this morning. And over in the canola market, November is down $3.20 a Canadian dollar at 528.10, and that is per metric ton. We'll be back in just a moment. We'll continue this conversation with Chris Swift about the livestock trade next here on the Market Day Report. Let's go to the live cattle market here. We got started off on a weaker note on the cattle and the hog market first thing this morning. October live cattle down 92 cents a hundredweight at 106.42. The December is down $1.30, and the February, it's also down $1.30. October feeder cattle down $1.37 at 140.105. November down 167 at 140.85. I want to pause here for just a moment before we get to the hogs. Chris, have you noticed that the feeder cattle market really hasn't been too interested in what's been taking place over in the corn market here lately? They've been kind of separated from each other.
They have been. We've seen the feeder cattle price, the feeder cattle index, continually stay up in the 138 to 142 range, and even though corn ratcheting up, there is some optimism within the industry, within the production side of the industry. I just hope that when it gets over to the consumer side of it, that they're as willing to bid up for it as what the production side of the industry is.
Why do you say that? Is there something that you see that could be a problem down the road?
Well, I think so. I think as we move into the wintertime, we know that people will be more congested in tighter places there in the house. They're not going to want to get out. They don't have as many restaurants open still. So a lot of that beef and stuff will be consumed there in the home. And we just do not believe that consumers are eating more beef. We believe they're eating more beef at home, but not necessarily more beef per person.
So what's a good gauge of that? What should we be watching for to give us that heads up that it's coming or that it's starting to evolve?
I think the box beef price. We've watched the box beef price go down. We've not seen any increase in the slaughter rate. So we know that without an increase in that slaughter rate or any kind of increases in boxes, we're starting to lose a little bit of margin to the packer side of it. But if the consumer were out there eating increased beef, we believe that we would see increased volume of slaughter to meet that demand, and we're just not seeing that increase in slaughter rates.
Well, one of the things that might help is getting these restaurants open, and that could also help this pork market hold in here where it's been. The hogs today here started out on the weaker side as well. October down 55, now at 65.95. It's not on the low of the day, though. December's at 62.62. That's down 90. February down 87. Notice here, Chris, that we went down and just kind of tested the water here and then pulled back up. Is there signs of strength left in this hog market, you think?
Well, with the index up today, the index was up $1.74. It's now at 69.58. Most all the futures markets on the front end are just a little bit under that area. So that's going to provide some support for the futures. Maybe that just holds them steady where they are until we can get something later on in the week where we start to see that basis converge. And we know with the October contract coming up in delivery in less than a week that will converge pretty quick.
Back to your point about the consumer, what about the pork complex? Does it need to see the same kind of interest in it, the restaurants open and things like that to be able to hold this together? And again, do we watch the boxes?
For the pork market, we watch the cutout on it. And we know that the pork has a big issue with China. So in the African swine fever, so pork is quite a bit of different than what the beef market is. They tend to export more pork than what we do beef. So I think our export markets are a little bit more important in the pork than what they are for beef right now. So I think the combination of both domestic and exports of pork, will be a bigger driver than just one over the other.
Swift Trading's Chris Swift here. Chris, thanks a lot. We'll talk to you again soon. There you go, Janet. Back to you, ma'am.
Thank you, John.